Also on the website.
Yeah. Oh, that's right. It's embedded.
Yep.
Let's see if this works. Bow. Hey, we're live. Hi, everybody.
Hey, YouTube.
Hi, Dr. Nick.
How's it going?
Right?
Yeah.
So we're
All right.
expecting some flatness in SPY today, but you know what? Even flat has its price action, and you can still scalp it with futures, but it's kind of one of those days where it's like you could spend your time just studying and practicing the recognition of price action rather than trying to chase this around and trade it. At most, you'll get like 2 pointers and occasional 3 pointers today. 5 pointers are pretty much rare on a day like today.
Let's walk it out, dude. What would you like? Let's say, out of curiosity, right? Like, what would be necessary for this turn into a trend day for to the up and the downside? Like, like, what do you think would be? I'm not talking about like news or something like this. I'm
Just
saying
natural
like
price
purely like on
action.
the chart. Like, what would we say from the chart? Like, okay, now we have a chance to be forming a trend day. I mean, obviously, a breakout to either side would be kind of a way to do it. But what would the levels for that look like for you?
So we've got kind of three ways to go, actually. We can come back and test this pivot line, the 408.91, which let's average it to 409, would be about a natural handle expectation for our little cup and
Mm-hmm.
handle. And if we were to
Mm-hmm.
trend from there, it would realistically come just outside of liquidity up here at about 411, 411.50 ish. You can
Mm-hmm.
almost count that as a trend day if it bounces off that support level.
So basically, it would be like bouncing off yesterday's pre-market high or low, or whatever, and then
Right,
trending up to today's pre-market high.
right. So it'd be
Hmm.
a very slow, kind of choppy trend, if anything. So it would be just trapped in the upper half of the range of this liquidity zone, which
Mm-hmm.
we derive from our daily chart, and it's literally just printing a box on a wick. And this is the wick I'm looking at right here. That's our upper zone. We know where the lower zone is, and if we fall out of this liquidity zone to the bottom, that can easily give us a trend day right back to yesterday's low. No
Yep.
problem. Watching this pivot is going to be critical. So if this gives us a one-for-one bearish measured move from our pre-market down to this consolidation and breaks, we could see it hit about 408. So we can just draw a quick box on that if you want.
That would be the one for one for that, basically. Just
Right.
from that. Yeah.
So drop us to about 407.80 to 408, somewhere in that neighborhood.
Now, if we broke into that box, what would you think? Don't you think the likelihood would be that we'd test the top of that liquidity zone, the bottom liquidity zone? I mean, if you see, I'm just like, if we go through the box, isn't it more likely to test the top of the liquidity zone than to reject off the bottom of the box for the 1-to-1?
So it'd be like a 1.5 to 1.
Yeah.
So if we take and split this box down, if we got roughly half of it,
Yeah.
it puts us just outside the liquidity zone. So
Yeah.
yeah, it's possible.
Yeah. I mean, yeah.
It's gonna have a hard time cracking this pivot though. I think there's some buyers going to be here.
Yeah.
Let me see if I can find a shorter term liquidity zone.
And then just for everybody else, what we'd be doing then, we'd be basically looking for wicks on a lower time frame than the ones you took before, basically, right?
Right now, we come to this
Good
two
morning,
hour
guys.
right here.
Good morning.
Is it
Morning.
me or am I the only one having video problems? Like I can't connect to the stream. I can only hear your voices.
I see it.
Might be just you.
Your cash.
I see it.
Might try
Yeah.
rebooting the Discord.
Discord. I did
I've,
that. I'm gonna try again.
I've run into that before where I had to go and reboot it, and then it asked me if I wanted to update.
Mm-hmm.
All right, so we have a little liquidity zone, not from yesterday, but from the day before, where we got this wick here, failed breakout. So that would be an expectation of where I would like to see buyers, and they're just under that 409 pivot. So if we come back to our 5-minute, we can kind of see. Trying to drag my chart around without dragging the boxes around. I'm notorious for that. You know what I should do? I should lock these boxes.
You can lock them. I can't do that on TradingView. Or not that I know of, anyway.
Lock that. And lock that. There we go.
I
That
do
way I
it all the
can't drag
time.
them
When you have a
around.
lot of lines and you start dragging, like you start trying to click the screen and you drag everything around instead.
Right.
Yeah.
That drives me nuts when I do that, so I'm just going to lock them.
Mm.
We know where they are. We know where the subzone is right here on the 2-hour chart. And funny, that puts us right in that 1-for-1 range right there.
Yep.
This is starting to look more and more like a bearish measured move. We're starting to get some turnover on the 5-second chart, and let me start plotting a couple fan lines for that. So we got one up here, runs down through here. So realistically, this could be your route. You could go and attach to a standard route right here. But you can come up here with the full trend line and have the extension. It gives you a little bit more accuracy for where the endpoint is if you come through it like this. And then there's another one right here. If I can get my drawing tool to work. So if this gives you a bearish 1-for-1, your target's pretty easy right here. And if you wanted to, use the box instead, you certainly can. And then your 1-for-1 comes right down to it.
Do you ever think about time in terms of like, or number bar counts or things like this when you think about the waves? I know that we were talking yesterday about, or was it yesterday that I don't remember what it was, but about Elliott waves and things like this. And one of
So-
the aspects that I never really
Yeah, you can do
Got it.
time. You can do time on
Yeah.
this whole trend from here to here.
Mhm.
Figure out about how many bars that is, or you can just
Mhm.
box it. So like you could take your box and run it exactly to that time, and then you can have an aspect of when that breaks. Where is that time going to be? Whoops, I just dragged it shorter, didn't I? So it can oftentimes mimic the same trend time after
Yeah.
the accumulation and break.
And do you experience that is actually a pretty good estimation of the time component of it?
Sometimes, because when you get a break, you end up with a little bit more volatility, typically.
Mm-hmm.
So like,
So like that whole like falling out a window but climbing up the stairs kind of deal.
right, this break here was not quite as volatile up here, but this break here, once it broke support, was very volatile. It was very quick.
No.
And of course, went right to the 409.41.
Perfect. Yeah.
That thing has been relevant for a long time on the 5-second chart here. Damn, Silvergate. Made the 1-for-1. I wasn't looking. We're going to do a 2-for-1. Going to $2. Well, 195 would be about the next zone. Just run it up.
Volume's ticking up also. Good night.
Damn, I guess I should have sold that put. All good. Never FOMO, especially on volatile stuff like that, because at some point there will be some sellers in there.
Yep.
Got a micro double bottom happening just above that 409.41 pivot here on the 5-second chart. Let's see if it makes or breaks. It'll give us a few more bars before we can pull either side of that. Although the 1 minute is getting ready to break critical support for that 1-for-1 at 409.40 right here at the base. And that puts us right into that liquidity box here on the 2-hour liquidity zone. This is a critical pivot point for this time frame here, and that would complete our bearish 1-for-1 right down here about 409.30, and 409.30 is, where is it at on the 1 minute chart? Right here. So a 5-second 1-for-1 would be sitting right on the critical support from the wick, or just below the wick here from our pre-market low. Excuse me a second, I gotta mute my mic.
All right.
That feels better.
Pick two good penny stocks though, and then from the morning, huh?
Yeah, kind of, sort of.
Yeah. Well, that's a pretty respectable move for a penny stocks.
Not too shabby.
What were you? What attracted you to those two? Was it just the options chain, something in the options chain, or was it something else?
So in actuality, I do something a little odd. I'll drag a screen over in a moment and show you. Let's see here. There it is. Grab the tab. So I'll go and pull up barchart.com, and then I'll just go and look for options change in open interest. So when you have increased open interest on your options, I can go and click here on price to sort them by price. And then I'll just find stuff that's trading around $1 or so and figure out where the best percentage shift is. Like here we have AGEN trading at about $1.39. It looks like they've got some call volume at the $2 strike here. 5/19 expiration, 38 days to expiration. Bid was 5 cents, ask is 8 cents. You know, it got volume of 534, so it traded within that range. Not huge for income on this thing, but if you look at the implied volatility percentage here, 146%, and the open interest changed by 949, there were a lot of contracts moved. So if you have that kind of volatility on it, obviously the options will be a little bit overpriced. So let's look at the yield on that. That's, let's say 8 or 9% on the dollar, but it was trading at about $1.30, so it's a little less than that. It's probably like 6 or 7%. Not the best yield, so I'll move on to the next one. It just updated, so it's like it'll throw everything out of range again.
BBY, talking Bed Bath & Beyond, they are bankrupt, right? So there's a lot of bankrupt companies coming up.
Yeah, I think BBBY is going to be too much risk. Same with MULN. I mean, trading 11 cents.
Yeah.
But somebody sold a bunch of 50-cent strike puts, 421 expiration. They got 34 to 38 cents for them. That's kind of a dumb idea because you should have gotten more like 40 cents plus because it's trading at 11 cents. So, I mean, 10-cent cost basis on assignment of a 50-cent put. It'd be wise to have an assignment price or a cost basis below the trading price. At 11 cents a share, it's going to be really hard to do that. But for some reason, there were a bunch of them moved. I mean, that's 3,247. That you have to remember, people are buying these, expecting MULN to go bankrupt, so they're kind of speculating on it. For every buyer, there must be a seller. So someone's selling these puts. So if I was to sell these puts, I wouldn't even think about selling these puts because it doesn't beat the cost basis. If it can't beat the cost basis by a relatively decent percentage, it's not worth the risk to me. And if I'm looking to wheel trade something for income, I'd like something a little more stable and trading at least above $1. So that's where I looked at Fubo. AGN is a decent one here. A little bit further out, but I mean, 5 to 8 cents. That's
Animal
like
Health had news recently.
3 to 4% yield on the dollar. Not huge. I'm looking at 4% plus natural yield on something if I'm going to trade it, a month out or 3 weeks out or something like that.
We define natural yield.
So natural yield, I consider it natural yield if you sell to open an option and you do nothing with it and just let it go to expiration. your natural yield is going to be how many, what kind of percentage I'm looking at for every dollar risked.
Yep.
So natural yield would be if you do nothing. If you actively swing trade those short legs, that produces an active yield. I would call it, I guess. In that case, I'm going to start looking for high and low on those options. So if I look at, options that are trading between like 10 and 20 cents, I know I got a pretty good shot at capturing at least a 5-cent move on those. And I can swing trade that short option for sometimes $5 daily. And if my cost basis is looking at around $1, those nickels add up pretty quick. You get $5 and you go for, if you want 10 weeks straight at $5, it's going to be $50, right? If you traded it weekly. But if you traded it daily, 10 days, $50, that's half your cost basis. And, that's knocking it down. And if you do that for 20 trading days and you can knock it down to zero, just trading a nickel at a time, moving those options out, you've achieved a zero cost basis stock. And that's the whole plan, is to try and find these stocks trading at about $1 and see how fast I can earn $1. So
and basically have free stock then.
yeah. And if it's a company that you're not too worried about going bankrupt, like we got Fubo with a huge cash injection, okay, they'll probably sustain at least till the end of the year on that without filing for bankruptcy, I would imagine. It's the least risk for the situation, in my opinion. Change that over here to Silvergate. That's some seriously high risk. That puts you in a position where even if you take assignment on this thing, selling a natural yield option, cash covered put, you're kind of putting a lot of risk out there. So here we have.
You have synthetic positions in these all at the same time, right? So you're not actually worried about being assigned because your assignment is always covered by.
So
even if you.
If they're trading around $1, I'm not going to bother doing the poor man's covered call situation where it's a synthetic position.
Okay. Yep.
I'll just do cash on a barrel basically. But if it's something trading like Amazon, for instance, that was a synthetic neutral position. That was beautiful because it yielded pretty damn good returns. But it did take a lot of portfolio liquidity to cover that position, to hold that position. So although it was technically neutral because it had a deep in the money leap put that I held long, and I sold the spread on that, so I sold a short put that was a leap, got assigned on it. My cost basis on assigned shares at the time was like 82 cents. That was a no-brainer because I still get to keep that long, deep in the money put, and it balances about intrinsically with the share price. So if share price goes up, the put value goes down. I've really gained or lost basically nothing within range of about 30 cents holding that position. And then if the share price went down, that put covers me. So if I see Amazon plummeting down like 60, 50, $40, I can just exercise that deep in the money put, cut my losses, and my cost basis on that still puts me in a neutral position around 82 to 84 cents, and I'm totally fine with that. But in the meantime, I've generated income selling covered calls against the long position.
Which is awesome.
Yeah.
That's
the strategy of being able to wheel trade this stuff has many variations to it, and that's just one of many.
Thinking which, I really love Bar Chart has a lot of really great stuff on their site. We should really talk to them and organize something.
I think I want to see about partnering with them, and their rates are pretty low for the premium versions. This is just the free one, and this is not really much. And a lot of this data is delayed.
$20 a month. Yeah, if you paid for a year, I think it was you could get it for $16 a month or something like.
Yeah, it's pretty inexpensive.
Yeah.
And all your penny stocks that people trade a lot of are right here. You can sell options on any of these and
Look
do
at all the
pretty
pot
well.
stocks today.
Yeah,
we got a lot of pot stocks
Tilray
going on.
Yeah, we got a lot of stuff moving in pot sector. Tilray and earlier I saw there it is, Sundial.
Sundial, yeah.
Sundial is the reverse split king of the world right now.
But you traded Sundial before, didn't you?
I have. I've actually wheel traded that before too, and
Yeah,
did very
that's
well
what it
with
was.
it.
Yeah.
But it's just one of those equities where it's like, right now they're a low enough float where they got some decent price action, so you can make some money on selling options on that thing, but it's not huge. This natural yield's about say 6%. April 14th expiration. That's not bad actually. That's pretty good for a 1 week expiration.
Oh yeah.
That might be worth looking at. This is delayed data, mind you, though, so it's probably a little different now, but I can pull it up in my chain and see real quick here. Sadly, I can't stream my Robinhood page here, or my Robinhood screen here. Let's see, Sundial.
Tilray is actually a reason. I mean, this is a long time ago. It was reason about Tilray also, but Tilray was actually a reasonable company, wasn't it? They had
Yeah,
weren't they the ones who did they did like commercial real estate for pot stocks, right?
I think that was their
And then
deal.
yeah.
I'm pretty sure that was their deal, actually. Okay, so it's actually trading at about $1.58 right now. That $1.50 call, that's only 12%. What's the put side look like? About 2% on the April 14th. But what does the May 5th expiration look like?
So if it's trading at 58 cents, what's somebody doing selling a call? I mean, why is why is anybody even playing at 150 for a strike price on that one?
Yeah, it's not worth it. Not in my opinion. It's too low a yield.
Yeah.
And like the $2 covered call, May 5th expiration is only trading at a penny, so it's like, not worth my time.
It doesn't make a lot of sense.
$1.50 cash covered put, May 5th expiration, trading at 12 cents. If that, no, that's the mark. There's no volume there. So Sundial is kind of a fluke. It's not really going to be significant, and it shouldn't really be here. But for some reason, somebody threw a bunch of money at that covered call, or somebody with more cash than brains went and bought a bunch of them. Who knows? But you look at the open
Always some
interest
congressman
change.
who knows that pot legislation is going to pass next week or something like this.
Could be. It's a Pelosi trade.
Oh yeah, that's the way to do it.
Oh man, and there's other ways you can go on this too. You can go up in the options sub menu. Let me see if I can find it. It's different on my phone. I have the 3 lines on my phone. Oh yeah, it's down here. You can go and group it. Go to
That site is
options.
just massive, man. There's
Yeah.
so much stuff on that site. It's just incredible. It's really like I go through it, and then like you find a screen, and then all of a sudden you're on something completely new that you never saw before, and it's like, oh, where did this come from?
You can find like PLTR right here, trading at $8. You can go and look at the options volume is huge on that.
Yeah.
Get your IV rank in there. So you can.
So Palantir is another one that
that
they were talking about going bankrupt, right? So there's a lot of for this. There's a lot of stuff that pops up, like bankruptcies, like popping up. Is it?
Yeah.
Is that something that's like normal, or is it?
Well, one that was in penny stocks. I mean, they're penny stocks for a reason. So like when they're trading around $1 or $2 a share, companies not necessarily going bankrupt, but they've been mismanaged or something's going on where they've been losing value forever. Who knows? Like you got Marathon Digital here, for instance. That has actually a pretty decent yield for selling covered calls on, but other than that, it's kind of eh. But you can go down and kind of see like
MUX is a good stock to look at. I don't know if that has any yields, but it's actually a pretty decent company. It's a miner. I think
MUX. I don't even know what that one is.
it's worth
The
looking at.
miner.
Yeah, I own a bunch of shares in it. Bought it at like, I don't know, 50 cents. It's doing pretty good. Probably
The
has,
rule investor trying to pump the stock a little bit here.
There
right?
you go.
We
Yeah.
we know what you're doing.
I know. Well, that's one of those that you just, it's a little bit of a lotto ticket. I bought a bunch of it and it's done well. And I really, I do think it could go to 20 or 30 bucks a share eventually. If we have the kind of tank in the market that I think we're going to have in the next few years and currency goes upside down, it'll be
Yeah.
a good one to hang on to.
Oh, yeah, absolutely.
And at that price, I mean, put $1,000 in it and forget about it.
Right.
Yeah.
Buy and hold and forget.
And
Tupperware
MUX,
was
I'll put
an
it on the
interesting one. They're doing pretty poorly. Unless they reinvent themselves, they're in trouble. But you can still get some decent options yield out of that if you've got a appetite for risk. You know, about $1 strike put here selling 519 expiration, about 13 cents. You could probably get that covered. Let me see. Tupperware TUP. Come on.
What is
now.
it,
There we go.
Tupperware?
Yeah, Tupperware. Oh, I see. It's only monthly options.
Oh,
you
but
can't
I
do
think they're
weeklies.
going bankrupt. I mean,
I
like
think-
out of business bankrupt. So be careful with
Yeah.
Tupperware.
Yeah, I bet
Yeah.
they are.
I actually heard that on the news that they're thinking about like closing the doors forever. So
Well, I mean, that's what happens when you use plastics that cause cancer.
well, I mean,
Yeah.
it's 7 years old too, and everybody and their brothers, competing with them. They just didn't.
Yeah.
They
You
didn't
got-
swivel.
Glad,
Yep.
Ziploc, and the whole gang, going after him. Yeah, they're pretty much providing disposable Tupperware now. So it's like,
Are they? Oh, yeah. That
but
doesn't-
there's a lot of option or a lot of volume on that dollar put. So far today, 637 contracts are traded. High low is 10 cents and 20 cents respectively. Current bid's 10 cents. Ask is 15 cents. Last trade was 14 cents. Pretty good yield, but man, the risk of bankruptcy is pretty high with them, so it's not something I would mess with. What is HUT?
It's a mining. No, Bitcoin mining. I think.
Oh, yeah, that would explain it. Some volatility, looks a little bearish on the chart if you ask me, but where does the options trade go? Hey, it's got weeklies. I like that.
Right. Hey, rule investor, you were saying that you also use Elliott wave, Elliott theory, right?
Yes.
Do you also use the time component for it, or do you?
So, not that I'm pushing anybody to any other place, but the guy that I learned from is really, really good. And if you want to get deep into the weeds on that, timeprice.com. Let me hang on 1 second. I'll get the URL. It's timepriceanalysis.com. His name is Mike. I can't remember his last name. But he posts on oh shit, what's I can't remember now. I'm sorry, I'm in a trade, so I'm like got half of my brain.
Oh, no, don't worry about it. You can take it.
Oh, yeah. Good point.
It's working. It's working. Yeah, there's a website. Shit. It's hang on a second, I'll think of it.
We're just hanging at that critical support level, and we're kind of threatening a 1-for-1 either side, but this just set up a trend. So now, if we accumulate, we might push 1-for-1 to 409.95. There was a comment in the chat here. Keep in mind, April 20th is coming up. Yeah, that's a pot stock thing. So.
Oh yeah, 420. Okay. Yeah, we missed. I bet that does have an effect, huh?
Kind of seems to.
Oh.
People start thinking about pot when they hear 420. Whatever.
Yeah.
All right, Silvergate kind of fudded over here. This is that bull flag where it's the third flag, and in penny stock land, this is usually where the shorts take over. So be cautious on that sucker. I would expect a quick break down to around flag 2 support level. This is typical, very typical penny stock move. If this bull flag does break out, it can certainly give you a 1-for-1 and shoot for 215, but usually this is where the sellers are looking to take advantage of everybody chasing this. So watch for a quick bar down.
Seeking Alpha. It was killing me. I kept thinking
Oh, yeah.
Zach. No, he's not on Zach's. He's on Seeking Alpha, which they have some really good people writing there. Anyway, so yeah, if you really want to dig deep, I would highly recommend just joining that just for the education of it and going through some of the tutorials and stuff. It's not cheap, but it's really, really, really good. Because it just gives you a really good macro view of the markets and stuff. And so if you step back, a lot of times I'll just go to a weekly chart, 20 years, and just kind of, it gives you a whole different appreciation of what's going on in the market right now. Because you think, oh my gosh, such big moves. We've moved 100 points in 2 days or something. That's nothing.
Right.
Yeah.
You know, so sometimes it's, you can't see the forest for the trees when you're so close, and that for me is what the Elliott wave's really about. Now on really small time frames, like I have a couple of 15-second charts up with Elliott shit, I'm doing it again. I need more coffee or something.
It's one of those days.
Linear regression. Gosh.
Yeah.
LRC channels on it. You'll see those waves. Like they're very, it's easy to see three wave corrections and 5 wave impulses, but just understanding what's going on, then you kind of get into that rhythm and you're like, okay, that was a push in one direction with a corrective move. So the wave 3 is the wave you want to get on because it's usually the biggest wave. That's all I use it for now. I don't trade around it, but it's like, oh gosh, that was definitely a corrective wave. I need to get on board going the other way. That's all.
That's kind of a thing that Stone and I used to talk about all the time in the penny stock room was whenever we'd see the first, second, and third, we usually tried to trade from 2 to 3 because usually it is the biggest move, and that's where Elliott wave comes into play. Simply, though, you go from first support to highest high, and it becomes just a simple measured move. So it's a quick 1-for-1. But yeah, it's kind of neat to be able to correlate all that and get to the same conclusion. Knowing where your price targets are is crucial.
And a lot of times, it's like you're seeing if you can get 2 or 3 time frames in agreement,
right?
Then you've got a really strong. That's your potential ace king. You know, when you can see it on a daily, an hourly, a 5-minute. And then you can get in and you're all in the same direction. That's when you can really hit a home run.
Yeah.
Or at least know that you're in the right place at the right time.
When that third flag, when you do actually, it's rare that the third flag will break out bullish, but when it does, it gives you a full 1-for-1. So 3 to 4 is usually a very big move if it does break out. So if you take that into account here, whoops, give me the dot. There we go. I mean, that for Silvergate would spell a big ass move. So you would go up here to like 227, 228. Pretty gnarly. But when you do get that 3 flag breakout where you get a full 1-for-1 from base up, you get a pretty big move. And then you also can't forget that there's going to be a pivot here right in about the middle of that liquidity zone that you would expect for the break. So we have one here at about let's go with 203. Somewhere in that neighborhood. I'm willing to bet this lines up with a daily candle somewhere. Top of the accumulation. If you do get a massive break on this thing, and we're right at angular resistance on the daily, by the way, from that massive descending channel I was talking about this morning. That thing is gargantuan, right? So if you think about it, there's 1, 2, 3 attempts already done. 4 and 5. We're on 5. So if we break out on 5 and we get a measured move, holy smokes, $100? Crazy, right? What are the chances of it getting there? Very, very nil. But who knows? With the way the Fed's doing stuff and the way everything's kind of playing out in the banking sector, this could be like buying a bank that didn't get liquidated in 2008. You know, you could find something at pennies a share and then catch that just really big boom. That would be the only reason I'd even consider selling options on Silvergate here. But other than that, it's been a dumpster fire for so long, you know. If it breaks this and gets momentum and starts closing gaps here, I mean, this gap here, this is a daily gap here. We start it, if we hit, 750, there's a gap all the way to 13, 14 bucks right here. It is visible. It's very plain to see. So if this, then that, sure, you can set up your trade parameters based on that and plan it out. If you've got that kind of risk appetite where you're willing to throw 180 bucks down the toilet, so to speak, per contract, okay, then the juice is certainly worth the squeeze if you want to do it. But if you don't have that kind of disposable equity in your account and you got a small account trying to chase this, you're very likely to get burnt, and the risk is just too damn high. So it's kind of up to you. I mean, if you wanted to be a speculative trader on that and wheel trade that, sure, it's got the markings of a great highly volatile stock to trade. It's got all of that and a bag of chips ready for you, but man, the risk is so high in that thing.
And what do they say? It's like good to buy stuff when the blood in the streets, right? I guess that's about real estate, but
well, that's the thing. Like when it comes to banks, like I mean, this is essentially a bank. It's a capital group. They do lending and investing. So they've been beat down for a long, long time, though. This isn't like a rapid drop like 2008 was. This is, this has been taking a lot of time to get to where it is, right? This is a weekly chart. And this is, back here, what is this, November of 21. That's this big bar here. That's the upper side of the range. So it took a whole month for that to move all the way to the top where that upper wick is, right?
yeah.
So if you think about this in a scale of time, it's been here before. It's been down here to like 760. That would be right in that gap zone. Okay. I mean, it's got the potential to ramp it back up, but I mean, like, this is not like your rapid drop like 2008 was. This was.
Yeah.
This was, all that stuff. No problem, but is it worth the risk? That's going to be the question.
That's a funny example of that was a 3-wave. I'm the one missing the word. That was 3 waves up and 5 waves down.
Right.
That respected the Elliott waves pretty well, right?
Yeah, more or less. That descending channel is just a big series of Elliott waves.
Yeah, that's the thing with Elliott waves. They're fractal, right? I've never read them. I mean, I have. I didn't really dig down into it, and I like going into the grime when it comes to theories like that. So I kind of leave them until I time to do it. But it seems it's one that I was interested in. I know I was reading some guy who was saying about Elliott waves that he was basically timing things, but multiple years out. So he was doing. I mean, it's almost like a buy and hold strategy, but his time horizon was 3 to 5 years or something like this.
Yeah.
Only based on Elliott waves. He didn't look at anything else. And
It works well for that.
what's that?
It works really well for that.
It was amazing. His returns were crazy.
Yeah.
He was doing like, and I mean, you can do 15% a day, but then you're sitting and looking at charts. He was doing his analysis at night, and he was just kind of like taking it easy, and then he's investing, and he was doing like 25 to 35% a year.
Yeah.
And he had enough capital that that was good for him, But it was it was incredible. And he was to the point where it's like he said, it's a mystery. I have no idea why it works. I just know that it works, and that's why I keep doing it. And I don't really need to know why.
It's on emotions and human cycles. has it gone too far? Has it gone far enough? You know,
Yep.
I think used to be more reliable because it was based on fundamentals of the market. In the
Mhm.
last 20, 30 years, it's the Fed.
Yeah.
It doesn't matter what a stock is actually worth because none of them are valued accurately anymore. You
Right.
know, um, we have too many derivatives of derivatives of derivatives that are being traded and too many short terms. So the market's being pushed around a lot. So it's a little bit harder, I think, and less reliable on short term
Yeah.
trading. But the psychology is still there.
Well, and you never get away from the business cycle, right? I mean, the debt cycle, business cycle, whatever you want to.
Yeah.
I mean, that's always. I mean, they have what is it? The long-term debt cycle, which is 100 years, and the short-term, which is what 30 years. So I mean, those things are always in play, and it does. As far as I know, those cycles aren't really broken yet. I mean, they're playing out now. So, I mean, even if valuations are broken, I mean, the debt cycle says valuations get broken right about now anyway. So I mean,
Right.
it's still going to play out.
You want to hear something scary I just figured out?
Hmm.
January 19th, 2024 expiration. Silvergate, $340 calls, $340 strike. Actually has open interest of 945 contracts.
Wow.
That's higher than its highest high ever. That's psycho, right?
Yeah.
Who the hell would buy that? Last
Yeah,
trade, people traded these at 5 cents a contract. You got to
Yeah.
really be smoking some
So the
damn
work-
good hopium for that. You
Right.
know?
The working theory is that sooner rather than later, something serious is going to break in the market because, okay, so we talk about correlation in the indices. Right now, if you look at the underlying, and I have to look up the website, I have to find it for you. Normally, the indices are pretty closely correlated, 80, 90%. They're wildly off the underlyings. And if you break down, it's like the top 5 or 6 companies are moving all of the indices, but everything else in the indices are going the other way.
Yep.
So
Right.
sooner or later, we're gonna hit a wall, and the Fed's not just going to pause, but it's going to pivot and dump liquidity into the market, which is going to cause an exponential or parabolic move to the upside. And
Oh,
that's
you know
why
it.
this market won't go down.
Yeah.
Because everybody's
Yeah.
waiting for that, and who knows what's going to trigger it,
It's like you got to ask yourself, when is the Fed going to break? You know?
right?
There's only so much they can do with fiat currency before it's hyperinflation time.
Yeah.
I mean, it's hard to fathom the idea of hyperinflation on the U.S. dollar, but dude, it's not beyond the realm of impossible.
And it's almost likely because they're practically causing us to. It's that or a significant crash.
Right.
So pick your poison.
Well, I
So-
mean, hyperinflation doesn't even have to be that. I mean, it can just be that everybody who's holding dollars. I mean, I don't know what the. If you look at the dollars in circulation that are actually in the states and outside the states, I mean, what is it like? I think 70% of dollars are actually circulating outside the states, or I think it was even some crazy number. It was higher than that. It might have been like 90% for all I know.
Right.
Are being held by non-U.S. entities. Which, if that all got pushed back into the states, if everybody sold all that, there would be a lot more. There would be a lot more dollars in the system rotating anyway.
Oh yeah. That's for sure. It'd be quite the pivot. I'm gonna look at FRC real quick because I'm curious. Because that's one of the banks that's currently in contention. And I'm going to be curious to see if it has the same kind of liquidity in the outer space range on January options as this does. That would be
So
psycho.
what would that tell you before you check it? What would it tell you if it does have that?
If it does have that, it would tell me exactly what kind of FOMO people are experiencing out there.
All right.
Other
That's
than
fair
that,
enough.
it's really nothing. I mean, it's just if I can sell those
Mm-hmm.
and I can gather that much share appreciation if I'm ever assigned on a covered call like that, damn, I would be a billionaire.
Oh.
That quickly. Just kind of nuts. I'm just curious to see though. That'd be
Yeah,
freaking
yeah.
gonzo. Let's see. So the highest call available on January 19th expiration, $60 on FRC. But it has open interest of 1,868 contracts. Now, mind you, those could have all been sold before that big drop. So, I mean, that's very possible. And when you see open interest on it, okay, it's understandable. Here's the kicker. Today, 19 contracts have traded, and the last sale was at $126 a contract, or $1.26. That's the kind of FOMO you really are shocked to see. People are expecting this to go back, above the midpoint of that drop. I can never see that going that high that fast, but it's possible. So when you have speculative traders at that range, well, what if you went and bought 100 shares? So you got $1,400 worth of risk, and you went and sold a $60 covered call in January expiration. For one, you would drop your cost basis by $126 to $137, somewhere in that range. Is it worth it? I don't know. That puts you at about a $13 something risk, or $1,300 of risk. For me, that covered call has got way too much time on it to even be worth selling. I would be more interested in the short-term stuff. So if I was to look at this, I'd start looking around May expiration. And at that rate, you can get a much better yield on it. So like you can go and buy $1,400 worth of shares right now, sell on May 19th, $15 covered call. That's more reasonable. And guess what? 46 volume today, 46 contracts sold. Last sale was about $2.86 per contract. That's a $286 reduction with a month out expiration. It's better reduction than trading that $60 contract. A lot less speculative, takes a lot less time to dissolve the value of that thing. And if it stays where it is, you make kind of a decent yield on that. But if it goes and gets assigned at $15 a share, you've made pretty good appreciation on that. So that would be more worth the risk than trying to buy this here and sell a leap on it, or something expiring at the end of the year. That's just my opinion, though.
Yep.
All right, so Silvergate did not give us the 3 flag breakout. It's looking like it's coming back down as predicted. Probably down to here around $1.50 or so. It might stumble at about this level here, about $1.62. So all of this was pushed up by essentially a short squeeze and a bunch of speculators chasing it. Pretty typical penny stock move. Seen it a million times.
And it wants to fade all day, huh?
Almost always, but sometimes they'll set up support here and then finish a move. So this is where we would talk about, I would set a bunch of extended price targets based on previous control zones, and find that they would hit almost all the time. They'd hit at the end of the day. So let's go look left. 2-hour chart gives us control range up here to 245, so that could be a pivot zone. Just on the body of the candle, I go to 242. Look a little further left. If we break that, we've got a hell of a gap here and a hell of a gap here. We got range to like 286. We got another one here at like $3. We got another one here at 360. Not likely to hit those by the end of the day, but it's got the potential to follow through if this is going to be a true reversal and not just a short squeeze. Other than that, it's just typical penny stock moves. You look at the previous control zones, mark your pivots, If you start gaining momentum on this thing and it starts becoming a worthwhile swing trade, sure, this is where you're going to look at taking profits or adjusting positions on options every time you smack a pivot. So if you wanted to risk that much and put a wheel trade together on this, if you've got the capital in your small account to do it, okay, we can plot that. But what is the time frame looking like on a zero cost, selling options at about that percentage natural yield? If you actively traded those, you could probably, just the same as Fubo, you could probably achieve about 8 weeks, get close to zero. If you trade on the volatility, and volatility is what you want on something like this, if you're going to wheel trade something like this for either training yourself or you're going to legit, have this as a long-term staple in your portfolio to make income on, yeah, it could be worth doing either way, whether you're training or trying to staple it. But just note that this thing can go to zero like at any moment. It could be like the Silicon Valley Bank, where they halted trading long enough to destroy everybody on that thing, and then I don't even know where it's trading now. I haven't looked, but that would have been the same risk as taking that same position on First Republic Bank here, to me. I mean, that is kind of looming. I don't know that they're going to let this bank crumble, but there's still a chance. And all the deposited money that was put into it by big banks, they're going to want that back sometime. So we'll see what happens.
They're going to want the money back. I think that's usually the way it goes, huh?
Yeah, usually.
Absolutely.
I don't lend money to anybody unless I really trust them, and I wouldn't lend these guys money.
Right?
No.
So on a completely different note, I just booked a yurt at the Lake Anna State Park this weekend.
Oh, sweet.
Yeah.
What exactly do you do in a yurt?
Oh, sleep.
Sleep?
Yeah,
That's a good way to go.
It's a
It's
unique
basically
dwelling.
a bubble with a bed in it that you bring your own sheets and stuff. It's camping without having to put the camp up or the tent up.
Oh, I like that. That's a good way to go.
I have a relative in Santa Cruz, owns some property, built a yurt for the purpose of renting it out, and it's actually a 4-bedroom yurt, full facility.
Oh yeah, no, there's some really nice ones out there.
Yeah.
You can Airbnb them, but at a state park, it's basically very rough.
Yeah.
It's
This
a
is-
bubble that maybe will keep out the bears.
This is off the beaten path in Santa Cruz, surrounded by what are those trees you get bay leaves from?
We've got a seriously long way to fall if this thing lets go. It's
Yeah.
dribbling. It's like a 2-year-old with a nose,
It broke critical support.
Come
We're
on,
looking at the
let
key
go.
pivots on
30
the
points. Let go.
key pivots on the 5-second chart are tripping one by one here. Next one's down here at 409. Snap that. We'll get a 1-for-1 straight to our liquidity zone down here. Easy peasy.
You've been scalping all the way down slowly.
Nice work.
Nice.
Been choppy. Great day for
me
trading
too,
futures.
and I can't get more than a couple of ticks. I'm like, come on, man.
Yeah. You're looking at a bunch of 2 and maybe 3-pointers most of the day. Just playing in the chop, which is worth doing.
Yeah, Jeremy, I've been
We
playing
can
in the
help
shop.
you.
I'm looking to sell some options today, I think. I'm still on the cusp of getting back into I've got my TradeStation account funded. I haven't started trading futures in it yet, and then I'm still thinking about doing the what was that other one?
Optimus Futures.
Optimus, yeah. I like the execution speed on Optimus compared to TradeStation, so I'm kind of
They do a lot just to, I'm actually pretty impressed with how much they give you for, like, just in terms of, like, they said, like, if you want to, in terms of tools and things like this,
Yeah.
what they'll give you just, like, for free. You know what I mean? Free is always nice.
I like Optimus because it reminds me of Tradovate in many ways, except for they don't give you that really high speed chart that I'm after. And neither
Yeah.
does TradeStation. So that's why I'm like, I want that 5-second chart, damn it.
Optimus has 1 second charts.
Does it?
Yep.
I couldn't get my. Oh, maybe it was because I was paper trading. Do you have to pay extra for
Yep. Nope.
them? All right. Well, that's an easy answer then. Let's go with Optimus.
Yay.
I will open it up and download it again.
So I just did a broken wing butterfly on the Russell 10 days out on the call side, which is a weird thing to do when you're moving down, but we had such a nice move up. I got in at like 1850, which I like. Now, how far down can we go before I can put another one on the put side?
Good question.
That's one of my favorite. I call it the cat ears trade. Because when you look at it on your analysis, it looks like a cat with ears. And you've got a huge area in between where you can't lose money because you put it on for a credit on both sides.
Right.
So it's like an iron condor but better. Because if we just range around between these and it slowly moves toward one side or the other, you can make a lot more. You don't have to peg the short leg, which you really don't want to get that close to, but if it heads that way on either side, it's one of my best trades. I love it.
The cool thing about the butterfly is it's very easy to adjust it. Like you can roll up the bigger gap side to match the other, so you can turn the broken wing into a regular butterfly, but you lock in a credit by rolling it up or rolling it down, whichever side you're on. And it's kind of a neat strategy.
Lucky, and because we've been ranging. I mean, it's a huge range, and you got to play with it a little bit. I used to do it like 30 to 45 days out. That's too much because there's too much room for something big to happen. But somewhere between 10 and 14 days, if you've got the right vol, it depends on. I like the Russell and I like the SPX sometimes. Sometimes the SPX moves a little bit too much. But it's one of the best trades I've found for just income when there's nothing else to trade.
Hey, we bounced the 409 pivot. Back up through 2 pivots. We're back to 409.35. 409.41 is right there. Can we get another 1-for-1? Where'd my box go? Did it get deleted? Yeah. Run these fan lines off too. I try to keep this chart clean because every time I add too many drawings to it, it lags. We might get one more 1-for-1 here. This is what I'm talking about right here. Puts us at about 409.85. It disappeared as soon as I clicked on the chart. That's the thing I hate.
Mm. I'm telling you, man, the drawing in the charts on Optimus Futures is also fast. It's that C++ foundation is like, it works well, you know?
That's the other thing I liked about it is I could draw on it pretty quick.
Yeah.
I think I'll go with Optimus. What the hell? Let me get the ball rolling on that. How is their transfer speed? Well, you're out of the country, so it's different for you. But
Yeah, no, it's slow. But I had massive issues. But I think it's I think no, I actually looked it up for U.S. people. They do smart transfers, so it's instantaneous.
oh, okay, good deal. Let's make it work. And the initial margin's pretty low on that one. I think it's 44 cents or $44 per MES contract and like $440 per ES contract. So that's reasonable.
Yeah, I think it was 40 even, man. Unless they
Was it
changed it.
40
Yeah, it's 40, man.
Oh, even better.
Yeah. Yeah. And the only difference between that one and like Tradovate is that you have to maintain. You have to keep like a sum on the account to trade it,
Right.
which I thought was that's actually a pretty good way to do it.
Like you have to keep like what, like
I
five?
can't. If it was $1,000 or if it was $500, I can't. I think it was. I think
Okay.
it was $500. You just need to put in for like. You just need to keep it on the account. So if you withdraw money, you can't withdraw more. Like you can. Yeah, you need to leave always
Right.
that amount plus whatever you want to trade with, plus whatever.
I
Yeah.
think that's all the brokers, because interactive brokers, you have to have at least 500 in the account.
Right. Okay. And then
Yeah.
the other question is, if your initial margin or your day margin brings that balance below 500 for any given time, will they auto liquidate you?
I haven't looked it up yet. It hasn't happened to me.
That would suck.
Yeah.
You'd want to have some room in there, probably like at least $1,000 account.
Yeah. I don't think they do actually. I'll look it up. I'm curious. It's a good thing to know.
All right, we're accumulated. We got a few more bars before we'll make or break this setup. This looks like a pretty good 1-for-1. And it touched off of that 409 pivot. Remember, the first analogy this morning was likely to stay in the upper half of this liquidity box. So if we're looking at our cup and handle, that's what is logical for a cup and handle. So we've approached the first rim line, we hit it in the pre-market, came back down, tested the key pivot. This would be the appropriate place for the handle part of our cup and handle. And if you look at the rounding bottom here, that's your cup. So rim walls, you've got always two. You get 1 and 2. The first rim line is exactly where the top edge of our liquidity zone is as well. So if this then that would say this is logical for a cup and handle. This is the handle. If it bounces here and proceeds to close at the upper limit of our range of our liquidity, chances are we could see a follow through tomorrow to run up to the bull side. Of course, the cup and handle has that same 60-40 rule as any kind of wedge does. So kind of be cautious of that. Don't go and throw all your position on one side going into the close today if you want to trade a CPI tomorrow. Ideally, it would be better done with a either a condor, or if you wanted to go with a strangle, you could, but make sure you have a good amount of time to deal with that strangle, because they're going to get expensive when implied volatility gets destroyed on those. So the spreads are the better way to go. As for trading that, you can run Friday expiration and be okay with spreads on that. You might consider going with Tuesday expiration just to give yourself a little bit more fade time available. So if it turns out to be a nothing burger, you can at least walk your legs out one at a time. Might be kind of the thing to do. Let me see what that would look like for position. Oh, hey, American Airlines is finally moving up. Watching for a reversal to take that up to about 15 bucks.
Doesn't look like they have auto liquidations. Everything I'm looking at, what brings up auto liquidations, the only thing that they're saying is, I mean, they must have it. I mean, if your account goes to zero, they must liquidate it. But
Right.
they don't. They're not advertising it anywhere.
Very interesting. Okay, so typically when I throw a condor together on SPY, and if I'm looking at Tuesday expiration, and that is April 18th, let's look at, gosh, you'd almost have to be, well, there's $10 out. You'd have to almost be $20 out to make the condor work on that with a reasonable risk factor. You're looking at about a 10-cent risk, buying the 396 put, selling the 394 put. And then on the call side, Probably looking at close to 420. You'd be at like 421, 422. Damn, that's way out there. So 422, 424 would be the equivalent call spread on that. It's a little bit too far out. It would take some crazy FOMC movement or CPI movement to make that do anything. But let's see what the cup and handle says for our expected range. So if this becomes our measured move from the cup and handle, I like to box them at about half. So let's throw this together. It kind of puts us in that range, right at 422. That'd be about where the call wall would be expected to be. So the difference in price on that spread will be significant. If your risk is, 10 cents or less on a $2 wide, you can make a decent trade out of that. And then to the downside, if it fails and breaks down, well, the outside would be 398. So the put side would probably get clobbered, win or lose. And I don't think you'd be able to even break even at that rate. You probably take about a 50% loss on the whole position for a condor spread. So if you're a little more bullish than bearish, and you're right, you've got a pretty good chance of making over 100% return on that. But on the outside chance that it fails and breaks down, you're looking at least a 50% loss on the whole position, likely. So is it worth the risk?
Oh, sorry, man.
Oh, go ahead.
Optimus futures will let you run a negative position into the close of day.
Really?
Yep.
So it could be a hell or high water situation, and you can still pull it off. All right.
Yeah. Yeah, it looks like it. They'll give you, but they won't. They'll send you a notification,
Well, of
but they
course.
don't close the position until end of the trading day.
Okay.
That's interesting.
So, like, if you get a quick flash on something like a Bitcoin Nano future, it won't skip your
wouldn't have
stop
happened to you.
loss. Yeah.
Yeah,
I like that
wouldn't have
idea.
happened. Yeah,
Okay. I think my
that's actually
decision's
good.
easier to make now.
Yeah. Cool.
I'll get that rolling. Let's see how long it takes to fund it. All right, so outside our cup and handle, on the bull side of that spread, we've got a pretty good shot at doing well on it. Heck, you could get into that spread on the bull side, Tuesday expiration, for about 10 cents right now. Maybe it'll fill. Let me see.
Hey man, I'm gonna jump off. I'm getting calls from
Yeah.
the developer. I'll talk to you later, man. All right.
You too, man. We'll see you later. Yeah, I'm getting
Take
Bye,
care.
everybody.
I'm getting about
Have a
ready
good
to
one.
wrap myself, but I want to see if this 1-for-1's going to start to materialize off of this. There it goes.
I'm gonna take off as well, guys. Thanks for everything.
Anytime, man. There's
Have a good one.
There's your half for one move right there. Done. 1-for-1's up here about 409.85.
Called it.
Nice moves.
Later.
Later, man. Have a great one. Hey, FRC is starting to choke into a half a diamond. Maybe it does something fun. All right, Silvergate. Definitely keep your eyes on this. It can still be a decent wheel trade after all, but man, That's a little bit beyond my risk appetite as far as wheel trading a penny stock. And again, I'll stand by my statement this morning. I wouldn't trade it with Kramer's money, but if it was just a risk of 160, 170 bucks, in a sizable portfolio, that could be fun to play with at least. So, kind of up to you. I'm not gonna say stay on either side of that. I'll just say it's a high risk position for the amount of premium you're going to earn. It's a natural yield, 12 to 15% on the options 3 weeks out. I mean, if you managed it well and you cut your losses quick, you could do well with that. But if it turned out to be a situation like Bed Bath & Beyond selling covered puts, good luck. Be very nimble. All right, on that note, I'm going to probably sign off, go eat some lunch before the market eats it for me. The half for one is complete here. We may get that follow through to 409.85 on the full 1 for 1. I'll keep it zoomed out on the 5-second chart until then.
Lunch sounds good.
Yeah, it's starting to smell good too. My wife's in the kitchen doing something nice. I gotta probably cut out a little early on Thursday just to kind of give a heads up. It's my wife's birthday, so I gotta take her out someplace special.
Oh,
Gotta do something nice for her.
happy birthday to her.
Yeah, she took me to Fat Dragon for dinner my birthday, so I gotta do something a little bit nicer than that for her birthday.
Oh, I like the one-upping. That's good.
That's it. It's a sign of a healthy relationship, right? All right. Well, anyway, I will see you guys tomorrow morning. Have a great afternoon. And, like I said, eat your lunch before the market eats it for you. It's going to be choppy from here on out. We might see some action into Power Hour, but Sig and I can kind of agree that it's likely to hang in this liquidity range for quite some time before it does anything exciting. I'm going to get rid of this box so it doesn't distract too much from the chart there. And this one I will center on a 1-minute chart to keep it kind of rolling throughout the day. While I'm eating my lunch, at some point I'll come in here and hit the reset chart button so it puts everything in a neutral position. So it stays centered. You can kind of see where all the plot lines and stuff are that way. But for now, I'll keep this up. So it might still follow through with that 1 for 1 here. All right. Well, I'll see you guys tomorrow. Thanks for joining me. And we'll have some more fun tomorrow. I'll get some more option stuff together. And I think this is typically between now and about the first week of May is when I start really looking for those opportunities with the wheel trade strategy on low-cost stocks, where I can find something that's worth at least practicing with. If you've never done a wheel trade strategy before, certainly a stock trading around $1 is going to be low enough risk to at least get you to cut your teeth on it and help you figure out how to utilize that trade strategy to your best advantage. And then you can convert that into variations of that strategy on large caps. You can do it as a standard wheel trade strategy. You can use it as an active wheel trade strategy. You can also go with a synthetic wheel trade strategy. There's many different adaptations to that strategy than just the traditional selling options on either side of price and letting them go for like 28 days and then buying them back for a nickel. There's much more to it than that. All right, then. We'll see you guys tomorrow.
See you, gentlemen.